Australia is now clearly into a housing correction mode. Prices are falling and they're falling faster than anticipated. Prices in Sydney alone down over 7% already in the cycle. What we're seeing is three clear groups across the country. If we fly over, New South Wales, Victoria and Tasmania are now seeing well-established price corrections underway, accelerating in the case of Sydney and to a lesser extent Melbourne. In other markets, we're just starting to see corrections beginning. Queensland, Canberra and some regional parts of the major eastern states are starting to dip into price declines. And then the third group has been largely unaffected so far. That's South Australia and Western Australia are still managing to eke out positive gains in prices, but the writing's really on the wall. They will be dipping into correction in the months ahead. Price correction is now very much hostage to the outlook for the RBA. Interest rate policy is starting to bite for housing markets. We're into correction modes in much of the country already. And the RBA signalled there's much more to come. That's going to see another leg to this cycle correction. We think we'll see prices down 6% nationally this year and a further 8% next year. But we think the RBA is going to go too far and that there will be rate cuts in 2024 that'll set the scene for a recovery. The cycle is looking a bit more pronounced than we initially thought. It's coming through more quickly, but at least there's a little bit of light at the end of the tunnel. This is still very much a demand-driven correction phase for the market. It's not something that's being driven by distress. It's not an overhang of supply or investors that have run into trouble. It's more simply that higher interest rates have made it difficult for buyers to stretch to reach the market, and the market price is now correcting to meet them.